Oh, hello everyone. Good morning and welcome to today's Forex session. I'm pretty certain you can all hear me because we just spent a couple of minutes testing the audio this end, and if David and I can hear each other, I think we're pretty certain you can hear me as well. But just to make sure, if one of you or two of you could just put that you can hear me in the chat box, that would be lovely. And of course you can't. It's a silly thing to say, but I've got no other way of doing it. Let's have a look. Quick. Here we are. No? Have you heard it from anyone?
Yes. Yeah.
Is that a yes from everyone?
Yeah.
Fantastic. Thank you so much. Appreciate that, because we have done webinars before where we sort of happily rattle on and rattle away and until one can hear us. Anyway, again, welcome. We're going to be looking at the Forex market, but before we do, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading, not just Forex, any sort of trading can be very risky business. So please don't ever think of using money that you cannot afford to lose. So I know we have some of our QTE students, I know we have some of our quantum users, and I also know we have some new people coming along today. So for the benefit of those of you who are coming along for the first time today, we're going to be looking at obviously the charts, and what we use is a methodology called volume price analysis to basically analyze the charts. But more important, what the methodology tells us is what is likely to happen next, which as a trader, that's all we need to know. But with the Forex market, in fact, all markets, but the Forex market, perhaps more so than all the others. We have fundamental releases, we've got fundamental data that impact the individual currencies and countries, and that can move the Forex pair as well. But we've added another element, and that is what we look at the related markets, because actually all the core capital markets are all interrelated, and that's the Forex, the equities, the bonds, and the commodities. They have relationship between themselves, and there are also relationships within the individual markets. But what we look at here is we basically see what is happening outside the Forex space, and is it likely to have an impact on the price action that you can see on your chart. I mean, the simplest one to get your head around when you start is what we call sentiment. Is the market in a risk on, or is in the market in a risk off mood? If it's in a risk on mood, that means it's willing to take on more risk. You will see equities rising, you will probably see bond yields falling, you could even see commodities rising, and that will be reflected in some of the individual currencies and some of the currency pairs. But as always, we have a look at that when we see when we look at the charts and some of the specialist indicators that we've developed to help us make this analysis. The core concepts of a VPA and what we call the 3D approach to Forex trading is they're actually in books up on Amazon, and this is a little digital box set that we've put together. What we also put together there are actually worked examples of a volume price analysis. Right, now volume price analysis, I've said it's volume, obviously. Now volume, what do you mean by volume? Because the Forex market doesn't have a central exchange, so we don't have, unlike stocks, we will never have a precise number of the contracts that have been exchanged, because it's what's called over the counter. But what we have tick volume, which is activity, and volume is activity, it's participation. Are there is the price move that we're seeing on the chart, is it genuine? And if it's genuine, it will have participation, it will have genuine buyers and genuine sellers. So the volume in the Forex market, we look at tick volume, and obviously we look at the price action volume. We use candles and candle patterns, and once you understand what the candle patterns are, and I'm talking about bearish engulfing, bullish engulfing, tweezer tops, tweezer bottoms, I'll talk about a little bit more about those as we move along. And finally, but not least, probably I think one of the most important elements of a VPA, and that is support and resistance. Now we look at support and resistance with price-based and also volume-based, and what I want to go through today is how you can use support and resistance actually as a means to perhaps joining a trend, because there have been some really nice moves in some of the pairs, and it can be very disheartening for you as a trader to, to start your day and, perhaps most of the move has already happened. But when you combine it with a knowledge of the volume and price action, sometimes with the candle and the candle patterns, but really it's support and resistance, which will also give you those points where, all things being equal with regard to, as I said, to the volume and price, you can, you could potentially join a trend, because the one thing that traders are always told not to do, and that is chase price. But price is always going to be ahead of you. It's either going to be going up or down, or sometimes it's not going anywhere. So you have to sort of come up with a tactic that you feel comfortable with, using as I said, the methodology and maybe some of the tools that we've developed, or some of the standard indicators that are out there that will tell you the probability. What is the probability of you perhaps joining this move that will develop into a profitable trade for you? That's, there's other things to consider around that, and I'll talk about that when we actually have a look at the charts. Now, once you have your foundation, as I said, you can then add your own tools. Moving averages, stochastics, Elliott wave, Bollinger Band, they all do different things, and you can use them in different ways. I haven't got any of what I call the standard indicators on my chart. Sometimes I hop over and put moving averages on, the exponential moving averages, particularly when looking at stocks and indices, because the 200 is always being quoted, even in the media, by financial journalists. Oh, the price is above the 200, or it's below the 200, and etc., etc. So these things are important, as it were. Or you have proprietary indicators, which is what we've used. We've developed our own. But you can have a blend of the two. It's really very much up to you. And overriding everything, we've got this element, what we call time, and that's not just the time frame that you are considering, but looking at things in multiple time frames. So we'll look at that as well. These are the specialist forex indicators. Those of you who are quantum users will know, and our forex students will recognize. We have the currency, what we call the currency strength indicator. In a way, it's really a currency flow indicator, which measures the strength of the flows. But it was a bit of a mouthful to christen the indicator in this way. So we've called it the currency strength indicator, but it also measures weakness. In other words, it measures the relative strength of the flow in an individual currency. And that's your starting point. So what is the market doing today? What's he been doing in the session that's just gone by? And when we look at the hourly CSI, the hourly I use because it gives you a quick snapshot of what's been happening, what is happening now, and also perhaps what is going to happen upcoming, as it were. So that's where we start. What is the market focused on? And this is where we can also pick up what the sentiment is. Now, in the last few days, and certainly last week, markets are in a very particular mood. It's not clear cut. It's not binary. It's either risk on or risk off. There are elements of it. There's all sorts of reasons why markets are even more uncertain than they are. Again, it's reflected in the forex market, and it's also reflected in the fact that you don't get a consistency of flows into what we call the safe haven currencies. Those of you who use the indicator will know, and I've put it up in our VPA room, and I've explained that the market is the way it is at the moment, and is likely to be so in the coming weeks, if not the coming months, until we get a kind of resolution. Are we going to have a decent correction? Are we going to have a good washout, if you like, from the very, very bullish sentiment that we've had up until now, or are we just going to carry on in this way, being very tentative? Oh, we're going to creep up. Oh no, let's roll over and cut. It can't seem to make up its mind, and there's all sorts of reasons for that. Then we have the matrix. The matrix takes this data, puts it together and tells us which have been, where we've had the strongest moves and in which pairs. Again, it's a ranking indicator, but it also gives us some other very important information that I'm going to show you when we have a look at what's been going on at the moment. Currency array is really a strength of trend. It's more considered than the matrix. The matrix reacts is much closer to the price action. This is, as I said, this is a strength of trend, and really depending on what your tactics are, most traders, and certainly David uses that to see when things are at an extreme. This market, of all the markets, is, I think, a true market of mean reversion. In other words, price gets extended, then it goes back, it gets extended. So you get these waves. You don't really get it in certainly not in the equity markets, because the bias for the equity market is long. Nobody buys a stock because they think it's going to fall. But you look at a pair such as here, you've got the pound Aussie. The expectation is that is going to roll over and it is going to give you a tradable opportunity. Then we have the heat map, which again is a very sophisticated indicator. It looks at the ranking and weights the strength, the relative strength and weakness of the pairs in multiple time frames, and then ranks them. We had a quick look at it last week, but I'll get David perhaps to look at it a bit more. And it's not an indicator that we feature a lot in these sessions, because we are strapped for time. We could be here for hours and talk about the markets, but we only have a limited amount of time. But it is a fantastic indicator. This is the education program at quantumtradingeducation.com. It now has the opportunity for students to take up what we call our funded forex program. You basically trade our money, so you don't have to, other than the entry. There's a cost of entry to the program, but that is it. It's a one-off cost. Once you're in the program, you then can happily trade away using our money and putting into practice all the things that you have learned on the program. And we have some students currently running through the program at the moment. You can, at the evaluation stage, you can take up to a year to actually find your feet. It's very, very conservative, very, very strict money management rules, risk management rules. But it's a great way for you to to test out without, as I said, without putting any of your capital at risk. This is the breakdown of the education module, as I said, at quantumtradingeducation.com. Right, I'm going to take that down. Oh, very quickly, let's just have a quick look and see what's been happening with the news today. And now, those of you who've come along, you will see I've actually got 3 calendars up. I've actually moved up from Forex Factory, primarily because some of the ranking that they give to the releases is that they've kind of got their own ranking, which is fine. But I was finding that I was getting a reaction, and you look at Forex Factory, because the way this works is if it's red, it's a high impact. If it's yellow, it's kind of what's called medium. And if it's orange, nobody's going to take much notice of it. But the issue is, at the moment, the market is very exercised with inflation. You can't move for reading another article on inflation. And you have to, this is what we explain in the program as well. So the releases to do with inflation, the market is paying more attention to. Now, they may not be the releases that the central banks pay attention to when they make their decision about interest rates. That's not the point. That's not the point. The point is the market considers inflation. The market is considering the whole question of inflation. Are we going to have are we going to in an inflationary environment? I mean, you only have to look at your daily shopping to know that things have gone up. But as I said, that's not necessarily what the central banks consider to be important. So I don't always rank the releases to what I think the market is currently considering. So I hop over to Financial Juice, and there's a perfect example of this. Canadian CPI, which over here was given a very, you know, low rank, if you like, is actually given a high, you know, it's considered a little bit more important. And also do they even have the Eurozone one? Don't think, and sometimes they don't always have. Here we are. Yes, they have the Eurozone one. And then finally, someone said there was even a discrepancy there. And this is a calendar that I've come across. It's free. You can set up your countries, right? This is the financial releases for every. Here we are. Take your pick. Now, you know, if you were to have all these going through your calendar, I think, you know, you would have to go and lie down with a wet flannel on your head in a darkened room. But in all seriousness, what you can do is you just pick off the ones that are important to you. I should also have Switzerland on here because that's quite important. Or you can make multiple versions of this, so you can have one just for, you know, the US, or for the pairs that you trade, for example. So it's a very, very flexible calendar. And what happens is, there we are. Where are we? Wednesday. Yes. What it does, it just highlights these the times. Here we are. Again, the inflation rate. Inflation. This is the market. You know, this is the market narrative at the moment that the market, you know, that the media is all focused on. Again, we have inflation rate. So if you're a CAD trader, you really have to know this stuff. And obviously, if you're, you know, if you're anything to do with the UK, it's the British pound. So there we are. So I just wanted to go through that. Now, what I said earlier about the currency strength indicator and the currency heat map. Now, I've only got this in one time frame because, as I said, I just use the hourly to give me an idea of what's been happening. And you only have to take a look at these lines to see where we are. You know, there's been very, very strong buying of the euro, very, very strong selling of the New Zealand and the Aussie. And I suspect we haven't looked at the indices at the markets that are, pardon? That David will fill you on that. What it also this tells you is that obviously, when I said earlier about mean reversion, now this has been climbing. This has been falling. So if you are as a euro trader, maybe on the, I'm actually going to look at the euro New Zealand, and I'm going to look at the new euro yen. And for the lessons that I said earlier, you will be waiting at some point. You know, that is going to roll over, but it hasn't rolled over. It's gone way over the, you know, the normal, you know, the extremes, as it were. And it can be very frustrating. But you have to accept that currencies markets, they will just keep marching either higher or lower until there comes a point when that elastic snaps and, you know, they do roll over. What that tends to happen is that's when you get a lot of volatility. It's not like sort of a gentle, like this one here. If you look at the British pound, it kind of went higher, rolled over, went higher. You know, you're kind of getting higher highs and higher lows, and then you had a half decent move there. It's been a much more measured move. It's still moving higher, but in that move higher from here, when the euro was moving higher, it's not been such a, you know, it's not been so dramatic. There have been pullbacks, potentially giving trading opportunities as well. The other reason I want to have a look at the matrix, because as I said earlier, the matrix gives this ranking. We have a ranking number. The number is quite important on the hourly chart because it gives us a clue as to whether we've had a, you know, we're already in a half decent move. And this is when we look at the values. If they're in the low 20s, you know, single figures, double, you know, below 20, there's not an awful lot going on in that pair. This number can be up to 3 figures. 48, there is going to, we've modified this indicator now that you will know whether 48 is average, below average, or above average. It's already available on TradingView, and we will be rolling the upgrade on the other indicators as well. This has been a very strong move. New Zealand dollar has been minus 60. That is clearly, you know, the New Zealand is the one that's being sold most heavily. But certainly this morning, whilst Euro New Zealand has been going higher, and it's one of the pairs I want to have a look at because it's been in a nice trend. It's been a very steady trend. The best move, if you wanted to sell the New Zealand, was actually against the US dollar, which brings me over here to the Dixie. and this index, and it was a perfect example over the last couple of days whereby the dollar's been falling quite sharply, and as those of you who follow my Facebook page will know, I was looking at, it was a break of the third level of the Camarilla, which is a price-based support and resistance indicator, and we were looking at, well, where is it likely to stop? Then you have the S4, but I also said I had volume support, and this is part of the volume point of control, and it really absolutely, you can't see the tail to this the candle here. It absolutely stopped dead in the volume support, but it was also reinforced by a price-based support and resistance indicator that we have here for MT4, MT5. This is this solid line. So you had a double, if you like, a double confirmation signal that the likelihood that this was going to stop. And what I said at the time, it could offer an opportunity for what we call a technical reversal. The technical reversal is, although the sentiment towards the dollar is overridingly bearish, you know, people, the CFTC numbers are huge, everybody's selling the dollar, you do get these technical reversals, and that's when they will come off these levels, and you have to have a way of knowing on your chart which of these levels are important. And you know, whether you're going to take it as a reversal or whether you're going to wait for it as a you know, a continuation of the primary trend, if you like, primary either bullish or bearish trend, again, it comes down to support and resistance. But there's also been another very important feature of the markets in the last couple of days. Now, this was a couple of days ago, and the other way you can use the matrix in particular is what was really interesting. This was just before the start of the US cash session. So it's, you know, mid-morning. We've had, you know, the London Euro session is a big liquid, you know, lots of liquidity, lots of going on. And the one thing that struck me about what was going on in the market, in the forex market, is that the top and bottom spots of the matrix was dominated by cross pairs. That's quite unusual. Most traders, the vast majority of traders, trade euro dollar because the spread is very competitive, understandably so. And especially if you want to scalp, you're not going to be there very long. You want a pair that is going to offer a very narrow spread. Otherwise, you know, your costs are going to be that much more. But it was really difficult. You know, the pair that, this is London we're talking about. If we look at the number, I've highlighted it here, but if you look back to the majors, even the majors were missing. You know, where was pound dollar? Pound dollar was at plus 2.06. That doesn't mean they're not going to move, but in the period where it's the deepest liquidity with the biggest participation, you know, probably, you know, just ahead of, and don't forget the US forex traders have already joined, if you like, because I'm talking about the cash session, which is at 2:30 in the afternoon. You know, where are the majors? Where is the dollar yen? Well, the dollar yen is up here. You know, where, I can't click it off now because this is a screenshot. Where is the euro dollar? The euro dollar was only plus 5.6. The moves, you know, moves that were producing some half decent, you know, and I'm talking 20, 30, 40 pips here, were in the cross pairs. So you as a trader, now, if you're a scalper and you're only looking to be in there for a few minutes, this is awfully interesting, and it's going to be very frustrating because you're going to have to wait until your pair comes, you know, starts to get a shift on, which it always will. You know, this market never stops still, but you have to be patient. If you are perhaps not so much a scalper in the sense of you're literally going in for a few pips and points, you're happy to go in, I wouldn't say longer term, because it's all relative, but maybe you're looking to stay in a few hours rather than a few minutes, then looking at the cross pairs, you might say, yeah, you're going to pay a little bit more on the spread, but maybe it's going to offer a better opportunity. And thirdly, the third is when you're putting together your portfolio of pairs that you like to trade, because ultimately I know there's 28. I mean, it's not like stocks. You've got thousands to try and, decide on what you want to, want to try and find a trade on or put together as a basket, as it were. You just have 28. So you start with the currency, and if you're in the London session, then the pound is the obvious one. And you think, okay, well, I'm going to trade the pound. Well, which of the pound pairs am I most interested in? And we've got all sorts of, there's all sorts of ways you can establish what the volatility of that pair is in that particular session, and over what time frame. Those of you who are on the program, you can work that out yourself. But we also there's also a link to investing.com, which gives you that. This is data, this is statistics, this is knowing your currency and currency pair. But let's take the pound. The obvious one is obviously cable. Then perhaps you look at euro pound. I like one of my preferences is pound Aussie, because when that moves, it can produce some stonking moves that you can stay in, crossover sessions, as it were. Don't tend to look at the pound New Zealand too much. It's really, and the pound yen, which is a sentiment pair. So between those four, what also happens is you're not necessarily going to trade all four simultaneously, because what else happens is two of the pairs may be moving in one session, then come to a significant resistance point, and then we'll just stop. And the rotation then maybe goes when New York comes on board. The pound CAD sometimes moves, and you think, oh, okay, if that's because you've got another set of of traders coming on board. So as I said, what did I say here? And what I also said was about the pound. I said if they do look further selling, and in fact we did have the indices did pick up a little bit after Monday. They've subsequently sold off, and the dollar did actually sell. So a little bit long on that one, but it's really important to know this stuff. The indicators will help you. If you don't have these indicators, then you're really going to have to kind of find a way of putting this kind of information together. All indicators do is they give you a shortcut into coming to these sorts of conclusions. Now, I'm actually going to stop there because I'm going to pass over. Are you okay to take on, or are you doing something? Yes? 1 second. Okay, Dave, I was going to pass over to David just for a change of voice. So I said I was going to have a look at Euro New Zealand, because Euro New Zealand has been on a bit of a tear, and which is, as I said, it's frustrating. Oh, just to finish off here, let's have a look at the euro. Here we are, because we've got very strong euro buying here. And the most popular pair, as I said, is the euro dollar. And you look at that and you think, well, how come that's not reflected in this? And there's a very good reason for that. What the CSI also tells you, and the matrix tells you, is when the lines are moving in the same direction, the chances are you're in some kind of holding or consolidation pattern. So it's that tells you immediately. It may have been an opportunity for some, a few pips, as it were, but it's certainly not moving in the way that maybe Euro New Zealand has been doing. So when they move together, and also when they're sort of in the middle of the matrix, that also tells you that you could be in a consolidation, or kind of what I call a kind of holding pattern before the pair decides to either diverge and go up or down. Right, Euro New Zealand. This is really, really interesting. Right, here we go. This is my five charts, which I use for this is MT4. I also use the same layout for MT5. And essentially what we're looking for obviously trading opportunities, but we're also looking to give us an overview of what the pair has been doing over the last few sessions, a few days. Now, it's very interesting with New Zealand. First of all, let's have a look at the daily chart. The daily chart, the first thing we can see about the daily chart is that this pair has been in a consolidation phase, if you like. We know that because it's been trading around the volume point of control. The volume point of control looks at price and volume over time. And it's also it's got a connection to what's called market profile. Market profile is premised on what they call value areas. It's areas on a chart, and it doesn't matter what you're trading, where the market, there's no divergence, there's no strong sentiment either one way or another. And volume is buyers and sellers, they simply it's transacted volume. So it's up and then it's down and it's back up and then it's, you know, a little bit more and it's up again, but essentially it's in a range. On a faster chart, this can be very, very frustrating, and it causes what we call very choppy price action, especially and when it's on a slower time frame, as it is here on a daily chart. In this phase of price action here, where you see you go down, up, down, try to go up, down a bit more, up. On the daily chart, that looks like a great candle there. There's a nice big down candle there. There must have been some trades on the faster time frames. Yes, there probably were, but because you're in this kind of pattern here, this holding pattern on the slower time frames, I suspect, and you would have to look at something like a Renko chart, there would have been a lot of choppiness as well on the faster time frames. But the thing about the euro yen is we had this attempt to break away. It was a failed breakaway, and it came back down again to test the volume point of control. Then we've had, this is Monday, Tuesday, Wednesday. These are the 3 days where the Euro New Zealand, not Euro, New Zealand has really taken off. And we can see why, because for the first time it's had, you know, well, for a start, it's had 3 consecutive up days, as it were, although there's a doji candle yesterday. So we have had what looks to be a successful break from this congestion phase. And this is the candle that has already happened, and you think, oh my goodness, you know, when we look at the faster time frames, you've missed all this move. What's going to happen next? 2 things to bear in mind. I said here to have a look at support and resistance for potential reversals, and this is quite interesting because we are hitting here a volume resistance. These bands here and here and here, these shadows that you see here, are all derived from this price action that you are seeing on the volume point of control. Don't ask me how it works, but the indicator comes up with not just where the volume point of control is and paints the histogram behind the volume point of control to give you an extent of the depth or the time that this, you know, has been in congestion for a long time. In addition, you also get these, they're kind of volume bands, and they mark, if you like, the boundaries between the high volume nodes and the low volume nodes. Now, that's quite important to know the difference between high and low volume node. A low volume node, you can see here, the histogram is very thin. It's certainly not as wide as it is here. That also has a number of significances, because when price enters a low volume node, the chances are it will go through very quickly, because what this histogram also gives you is it's like a cushion. It's like we talk about volume support and resistance, but it's also like if you imagine like a soft cushion. There isn't much of a volume cushion here. So if this were to return down here, when it gets to this band, the chances are it will go through here a lot quicker than it has taken to get from here to here. When it reaches these, when its price is, is moving through these denser areas, it's much more of a struggle. That's the first thing. Second thing is note, look back over to the left of the chart. This is a double top. Are we looking at a triple top? We don't know. We would have to wait a little bit longer because this is the daily chart. But what it does tell you is that in this trade that's moving higher, is this the point where this is actually going to roll over by virtue of the fact that we are potentially looking at a triple top? Something to be aware of. Then we look down at, well, this has been a jolly big candle. The volume is just a fraction of what these two are. So you think, that's another mark against perhaps it moving even higher at this particular a point in time. And so that's what we also have to be aware of. What this also gives you on the slower time frames is, I was looking at this earlier, and as soon as I saw this, I said, right, this is where it is likely to stall if you had managed to enter part of this move higher. And for that, we have to look at the other timeframes and the potential entry points that were highlighted in the faster timeframes. So this volume band here, not only was I looking at a triple top, but it was also giving me a potential objective for this pair at this particular time. I now have the hourly chart, and in fact, the hourly chart, all I have on here is I have the CSI with just the two lines, and we can see here the extent of the overextended. But we have to bear in mind, as always, things can stay overextended an awful lot longer than you and I can stay profitable, as it were. But there's lots of interesting lessons on this chart. So we saw on the daily chart that we were reaching a point on the daily chart of a potential triple top and a volume resistance. How does that play out on the hourly chart with our Camarilla indicator? By the way, these levels on the daily, on the hourly, are also applicable on the hour, but I've just left them. It's too cluttered. I just wanted the hourly chart to have the volume on it, the volume's resistance. What's interesting is it stopped at the fifth level. Now, of the levels, these 6 levels, the most important are the third and the fourth. And what we have here, we have a number of lessons, and we also have lessons tied to what we can see down here on the volume histogram. This is where we look at VPA 101, basically. We know that's come to a pause point. We can see that in the indicators. The volume falling away on the candles moving up to the 5th level. What do we see? We see rising prices, we see rising volume. That of itself, even without our support and resistance indicator, we would know that we are reaching a pause point. I cannot stress this enough. If you don't have our indicators, fine, that's pretty much up to you, but you have to have a way of marking on your chart those important levels which the market is going to respect. You could use Fibonacci, you can use a moving average. We've focused on Camarilla and volume because, in our opinion, they are just so powerful, and they give you these signals, and it just takes all the guesswork out of what is happening on this chart when you read it with, as I said, VPA 101. So we are expecting a reverse, and don't forget this is the hourly chart. Now, the levels on the hourly chart and on the daily chart stay on this chart for a whole week. So it's a great way to almost kind of swing trade it. The key, as I said, the key level is the 3rd and the 4th. It's where price is drawn to, and then it will either go into a congestion or it will either carry on to the next level. It could be a volume level, or it could be another price-based level, and maybe reverse. And we have, as I said, we have the other indicators to help us. The 3rd level, and we will see this in action on the faster time frame to do with this morning, is really where you can possibly look for an opportunity to take an entry point, basically. So this is the 3rd level. This is on the hourly chart. Now, obviously, when we look at the volume on the hourly chart down here, you'll see above average on this average line, and you'll see a lot of below average. And it can look very distorted, but this is because we are looking at different time zones and at different trading sessions. And people always say to us, well, how can you use VPA? Because there's no consistency of participation across the 24-hour trading day. And well, there is never any consistency of participation wherever. All these markets, all we know is that they are 24 hours. There's going to be fewer traders in Asia-Pac than there are, once New York comes on board. It does not invalidate the VPA, because you are looking at the relative you know, what is the volume doing? Is it falling? Is it, where have I got a rising one? Is it, you know, is it rising? Then it's sort of falling again. That is what you're looking at. And that will happen on whether that's, you know, whether that is in this session, this part of the session here. And in fact, this was the point that I wanted to highlight, because what we have here, we have the S3. Let's talk about the R3. Let's talk about this third level. We have two signals here that once the price had come back to it, and you know, it kind of congested around it, but there were two little signals here based on candle patterns that you might want to consider. A 2-bar reversals are very, very strong in forex, as are bullish and bearish engulfing. When they occur at this particular level, at the third level, and they are supported with volume as well, then I'm not saying you take it, you know, that's it, that's the one, because you know, you have to look at the other factors as well, but they can give you, you know, a comfort, as you like. Now, if we move this to this 2-bar reversal, it actually got down to the R2, that the other levels do actually act as support and resistance as well, but the action, if you like, tends to take place around the third and the fourth levels. So we had a 2-bar reversal here. We had a nice load of volume underneath it. Don't forget, this is the hourly chart. This could be any time frame. I'm just using the hourly because there were some really neat lessons on here. We had a 2-bar reversal. And then we had another candle, but the volume is falling. Then we had a really squishy little candle. So we had an anomaly with a lot of volume going underneath it. And you think, oh my goodness, this is, you know, this is it. This is not going to go any further. It's going to reverse. And it did actually reverse. And you can see here, we actually saw the volume rising. You think, okay, well, that's time to go short. But the third level is such a key level that you have to wait until that plays out. First of all, you do not go off one signal. You really have to see whether that is going to play out. And in fact, the next candle, what did you get? You got a bullish engulfing with a ton of volume underneath it, and you think, right, you have to be a little bit patient with these signals, depending on you as a trader, whether you're more aggressive or you're more conservative. I think when you're starting, I think you should err on the side of being more of a conservative trader. You have a ton of volume going into these two candles here. This is the key one, because this price action is playing away from this key level. You can see they're very squished candles. I think this is, where was this? Yeah, it's 8, 7. It's towards the end of the US session, so there's not an awful lot going on anyway. But it doesn't matter, because first of all, you would expect the volume to fall anyway, so that's fine. But it's also telling you that, you know, nothing dramatic is going to happen. So if you decided to go along here and you're going to stay in this, you know, because this is the hourly chart, you're not going to be in here for 5 minutes. You say, yeah, okay, well, I'm happy with that. And then it, you know, the pair begins to wake up. You've got a bit more volume coming in. You've got a down candle. That's a really nice anomaly, because you've got a widespread and it's very, very low volume. And then you've got this creep higher. You can see the time. You're going into Asia Pacific. But, you know, I know these look like little candles, little volume bars, but, you know, it is contextual to the times, so the time zone, and you've still got the euro rising, and you've still got the New Zealand falling. And then it kind of really gets underway, gets to the fourth. I said the fourth is another key level, breaks through, comes back to test, and on it goes, and it's now stopped, because we know of what has happened on the on the daily chart. Now, to give you what's happening this morning, these levels that are calculated for you based on, these are refreshed every day, and this is how you would use the third level using a Renko. And also, let's have a look at the 5-minute chart. I don't actually have it on the 5-minute chart, so let's just look at the Renko, because the 5-minute, you would use it together with the 5-minute, but I thought that the Renko really expressed it. This is devoid of time. This is simply one of these little bricks goes through once 3 pips have gone through the market, and we can, as I said, we looked at the daily chart. It's been on a, you know, really nice move higher, been a couple of little pullbacks, that's fine. And it's moving higher. You've missed it. You maybe, you are trading on a short, on the shorter time frames. This is where you would use the R3 again, and you would use the trend dot if you have the trend dot, and using the trend monitor. This trend, if you like, really started way back here, which is where was it? Yesterday afternoon. And this is the congestion that we saw on the hourly chart, where price doesn't really go very far. But it's when it gets to this key level, I would say the third and the fourth, and then all the other levels are retest levels, support levels. But really, if you want to, in my opinion, if you want to look at looking to move in, it's a bit like the way people use Fibonacci. There's lots of Fibonacci levels, but they look at the 50, they look at the 61.8, they look at the 23, whatever it is, and they become those points where potentially you could re-enter a trade. So what you've got is you've got it moving higher, you've got a little pullback, and then off it goes. And the other indicators keeping you in anyway. The trend dot's keeping you in, the trend monitor's keeping you in. But by combining it with these levels, it just gives you that additional comfort. Now, the VPOC has actually moved up from, where are we? Let me just put the Camarilla on here as well. I don't normally have it. Let's have a look. Where are we? So where's the R3? Let's go on. There we are. This is, just squish that down a bit. Yeah, this is the point that we were looking at on the CS on the Renko, but because it goes back, what happens with the volume point of control? This is dynamic. This would have been down here, but there's another set of VPOC in levels that have been calculated with the move higher in on this chart. Let's see if the 15 can give us a bit more of a, yes, here we are. You've got a better more clarity, if you like, from the R3. And in fact, the volume point of control was just under, it was just here. We had a bit of volatility. This is the R3 that we saw on the Renko, and this is the move higher that we have seen. And what's also interesting, you can see these weak candles coming in, you can see the wicks to the tops and the bottom of the candles. So clearly, there is weakness coming in. We know why there's weakness coming in, because we can, the slower time frame, i.e. the daily, is telling us we are reaching these key points. Now, what the Renko also does, we've actually blasted through. These are 6 levels. The daily levels have now gone. They've been done and dusted. So that will now act as a level for the rest of the session, where it will come back, perhaps retest and go through. And we move up to the hourly, and looks like we've stopped at stalled at the 5. So for the rest of the day, if this is going to carry on higher, then the next level is the R6. We've actually chewed through the hourly levels, daily levels for this week. So tomorrow we will come back and revisit the ones that are refreshed every 24 hours on the faster time frames. That's how you use these levels, because they change all the time. Now, I'm also, very quickly before I pass over to David, I know I've talked on a lot, but there's a lot I wanted to say. Right, someone asked about the euro yen. I'm just going to take this, I'm going to move this back to, change that, there we are. All right, the Euro New Zealand was a breakaway on the daily from a congestion, a very, very different chart to what we see on the Euro Yen is in a very definite uptrend, as we can see here. It's in a primary uptrend.
Apologies about that. Anna's having a coughing fit at the moment. She's just, are you all right, yeah? Yeah, she's just lost her voice for the time being. Apologies about that. I will come back on the euro again, but it essentially just to, in fact, let me do it here, probably. Yeah, do it here.
Did you hear me on that?
What's that?
Did you hear me when I was speaking?
Yeah, only just dropped out briefly, that was all. There we go, that's the euro yen chart, same chart as Anna was seeing. Pretty bullish at the moment. We've had some minor congestion around the volume point of control. What have we got here? It's not it's one that I have on a much longer term perspective. looking to get it up to 135 and beyond, so it's definitely going in the right direction. Trend monitor's bright blue, gone through this low volume node very rapidly, coming up to 133.50. Expect a bit of a congestion there. Let's just flick this over and see what the weekly looks like. Have a quick look at the week. Doesn't really tell you a huge different story. Let's have a quick look at the monthly. There we go on the monthly. So that's the monthly picture. That's the one that I'm kind of looking at. And really what I'm looking for is to get beyond this level here, about 136 odd, because once we get through there, then we really are into low volume regions right the way up through to 150 and beyond, which is a long way to go. But that's the kind of trend at the moment, breaking away from the volume point of control. As long as we keep seeing decent volume driven in here, through this region here up to 136, 137 on up to 138, but that is very much a longer term perspective, obviously. Let's just pop that back on to the daily. Just hold on one moment. Yeah, no problem. So that's the euro yen. I was on the Aussie dollar, which was the one over here. There we go. A bit of a reversal coming up. You can see very heavily oversold. This is on 10-minute on the CSI. So there's been lots of dollar buying. In fact, if I pull over let me pull over the trading view. Easy to show you here because I've got it all set up. Just to bring you up to date with those who come along regularly know I'm running this it is micro only account. This is a live account, FXCM live. You can see it there. Last time we looked at it, I think it was about 11.40, 11.50, something like that. We've added another $50 odd, so that's another 500 pips gone in. And basically what I'm doing with this, I plan to get this up to around $1,800 by the end of the year. So in a year to double the account, if not more. Which works out roughly at what, I don't know, 100 pips a month, or $100 a month, 1,000 pips a month. And this is purely based on sentiment. So all I trade in here is just sentiment. It's just yen pairs, few dollar pairs, the odd Swiss franc occasionally, but that's pretty much it. So I'm not really interested in euro, not really that much interested in pound. It's all about sentiment. I'm looking to either trade sentiment up or sentiment down, one or the other, simple as that. So we're getting up to $1,200 there, and I'll just keep you posted. I closed out some positions yesterday because when you look at the 3 primary US indices over here, there's something that jumps off the page at you is this. The amount of volume that went in there was a red flag, and we're expecting a rollover, and that's precisely what's happened because there was just insufficient volume on that particular candle. You've got exactly the same here, big widespread up candle, very low volume. Same over here, big widespread up candle, pretty much the same as that, yes, without the wicks, but look at the volume here and look at the volume there. It just tells you loud and clear, this ain't going nowhere, it's gonna roll over, it's weak, and it has been. Now I'm waiting for potential reversal, more buying coming in. What's interesting is the heavy selling is not really delivering at the moment. There's no mass selling, so it's kind of like a technical correction. So I'm just waiting on that one, and then we'll jump back in. And basically on the account, which I showed you just now, on this account, as I say, it's all micro lots, all sentiment based, and scale in, and that's it. It's very simple. It's about 5 or 6 currency pairs on the account, and I'm just scaling in all the time. As soon as I get a decent position, I'm scaling in, building positions, and then closing out, take my profit, and on to the next one. It's as simple as that. And so far we've done, I think it's about 350 odd dollars, which converts to 3,500 pips since the start of the year. So it's going along nicely. Yes, the trading view indicators are coming along. We hope to have them launched this week. We've had a few minor technical things to sort out. That's the VPOC. This is the time-adjusted Renko. It's basically 2 indicators in one. If you want to run a Renko in association with a time-based chart, as it's shown here, it's almost impossible because when I switch this back to the regular Renko, it's 2 in 1. Now you're on a regular Renko. Let's click that off. It's very hard to actually match this price action against the price action on a time chart because the two don't relate in a direct way, because a Renko is independent of time. It doesn't associate directly. But if you click it back onto the time accurate rather, then it does. And it basically gives you this really nice levels of support, resistance, blocks of time when the market is moving sideways will be reflected on the Renko. If the price action is moving higher, then the time accurate Renko will move higher and consequently move lower when the price action is moving lower as well. So it's two indicators in one. This is the accumulation distribution. If you have the NinjaTrader platform, you know exactly what this is. It basically gives you these levels, the strength of these levels described not only in the thickness of the lines, but also in the number of times they've been tested or retested and held. It's just a great visual picture of strength and weakness across all the various time frames. On this one, I've got the array and the currency matrix. They're all up and running. And finally, over onto the currency heat map, where I've got three of them running. So I can find it very quickly, where the other one's gone. They slide off the screen. This is the one on the left-hand side. As you can see, I've got 1 hour, 4 hour, 1 day and week, and you can adjust these time frames to whatever it is you wish to trade. So if you're a scalping trader, you can have a minute, 2, 3, 4, 5. You've got 5 columns, but as you can see here, you can actually run multiples of these across the time horizons. In terms of what's been going on this morning, just flick that up live, full size. There we go. This is the dollar basically. So it's been running pretty much bullish all morning, still continuing to rise. So there's been some really nice trades across the currency majors. Let's pop that out of the way. And that's also reflected in terms of on TradeStation. This is on the currency futures now. I've got the 6A, the 6B, the 6C, the 6E, and the 6N. So I've got Aussie, pound. I've got, this is CAD dollar, not dollar CAD. This is Euro dollar. This is New Zealand dollar. And over here, I've got Swiss dollar. So the fact that Swiss dollar is falling tells you the dollar is being bought very strongly. This is Euro dollar at the top, all linked through onto radar screen down the left-hand side here. It's just such a powerful way because I've got, not only can you flick very quickly, these are all, you can see up here, these are symbol linked and interval linked. So not only can I flick down here and just go and choose whatever I want to look at. So if I want to use a different time frame down here, just click on that, automatically updates. That's Euro dollar on 5 minute now on the future. But we've also developed the indicators to run in terms of inside radar screen. So you get this very visual picture of what is going on in terms of trend monitor on that particular time frame, and it's reflected here. So if I go down onto the 1 minute for Euro dollar, what you'll see there is in terms of the trends, in terms of the trend dots here, they have started to migrate into bullish sentiment. In other words, the trend monitor here has gone to a darker red. In other words, it's just starting to follow that particular pattern. And if that reversal in trend, where is it going to go to? Well, it's going to get through here pretty easily, but then it's going to hit the volume point of control up here at 18. So it's only got 5 or 6 points to go before it gets into trouble on the 1 minute at any rate. But you get the color changes here, tells you instantly what's going on. So you can see a visual picture right the way across all these currency pairs. You can move through them very swiftly. And this is basically TradeStation Global. This is being driven by the Interactive Brokers account. So if you have an IB account, you can link it straight through onto TradeStation. It's a very simple process. You can trade off the screen and you can trade all the markets that you normally would through your IB account. I've got the NQ set up here. This is the NASDAQ. Over on the right-hand side, top left, I've got all the time frames again. I can whiz through these very, very quickly. And what you're seeing visually here is from the 1 minute, you've got bullish sentiment coming in on the trend monitor, on trends. You've got it on the 2 minute now. You've got it on trends. You're starting to see some transitional color changes on the 3, 4, 5 minute. They're not changing it on the 15, 20, 30. You wouldn't expect it. But if this is a true reversal in trend, in other words, this is going to go straight through to blue, then you'll see that drop down these channels here, or drop down this the radar screen here as that sentiment develops. Because like all things, sentiment always starts in the fastest and migrates through to the slowest. And then down at the bottom here, I've got the time and sales window up. This is basically showing me what trade. These are actual trades, executed trades in the market. They're not. This is not spoof. This is not a ladder where there are spoof trades going through. These are actual executed trades, whether they're executed between the bid and the ask down here in white, whether they're at the ask or whether they're below the bid or above the ask. And the ones to look for are high numbers. In other words, these are of no interest whatsoever, 1s and 2s. I'm not going to dwell on this too long, but in terms of trading off this particular methodology, what we're looking for is we're looking for big numbers, and we're looking for where those appear, whether they're above the ask or below the bid, because it gives us a clue as to the bullish or bearish sentiment, and then how that is reflected in the price action. As soon as one of those big numbers has gone through, there was an 80 went through about 10-15 minutes ago, gave this a big injection up here of momentum, and it went above, I can't remember where it was now exactly, but it was a big number and it was significant. And you watch how the price action develops. But that's basically what's going on in terms of the NQ at the moment. But in terms of global sentiment, just go back onto Ninja again, drop that out of the way. In terms of where we are in terms of global sentiment, it's pretty bearish. It has been for a couple of days, but as Anna said, it's very choppy. The NQ is coming down to test the volume point of control on the daily. And for once, all three primary indices are all in agreement, more or less. Let's get rid of that. So they're all in agreement, more or less. And at the moment, what I'm looking for now in terms of if I'm going to go short or long over on the sentiment account on TradingView, I'm looking for some direction now. I'm looking for some volume signals. I'm looking for overbought and oversold, because if we go over onto just pull that back again on TradingView. Let's move that out of the way. There we go. In terms of the CSI, what we're looking at here, this is 4 hours. So this is my slowest time frame for this particular account, if you will. There's a lot of dollar buying, there's a lot of yen buying, so that's telling me that sentiment's pretty weak at the moment. The Swiss franc, that should be rising as well. It's starting to sell off a little bit. I'm not interested in these two at the moment, and really what I'm looking at is the commodity currencies and where they're going. And in this particular time horizon, they're being sold. So what I've got to wait for now is for a bounce to occur. I'm looking for volume opportunities. You can see the VIX here. That's spiked higher. No great surprise, gone up to 21 odd. So that's what I'm looking for. Let's just see where the dollar's going. Okay, it's still climbing. So that's not good for sentiment and equities and everything else. So it's just a question of waiting, being patient, and then we'll decide when we're going to jump back in, add some more positions and start building, scaling in again and building another set of positions for that one. Let's just head back on over to the There we are. Current split multiple time frames. Actually, just have a quick look at the CSIs on multiple time frames. There we go. Just wait for that to load. I've got so much data running in here at the moment. That's on 1. This is on 5. This is on 10. This is on 15 minute. And whether you're using multiple time frames for your charts themselves or whether you're using them for the indicators, exactly the same principles apply. New Zealand very heavily oversold on 15, the Aussie starting to rally, Swiss franc selling off, you've got the dollar up here at the top, you've got the CAD up here, we've got strong selling of the euro now, decent selling of pound, the yen is starting to sell off, the yen is starting to sell off here. So in terms of scalping, it's an opportunity for reversal. Might be looking at an Aussie yen, maybe looking at New Zealand dollar, the CAD's up here, there's lots of opportunities. It's just a question of picking a poison and deciding what time frame it is you are trading, and it's absolutely critical. The little account, the micro account, I'm not interested in what's going on 5, 10 and 15 minute. I'm looking at that. Those positions are held for hours and generally speaking days, and often over the weekend. That's how I'm building that account, and it's a limited number of pairs, and it's very clear risk and money management rules. It's as simple as that. It's very straightforward. There's nothing fancy pants about it. It's just really designed to show you that that when you start, it's not about making money, it's about finding consistency and being able to deliver pips on a regular basis. Because if you can do that, the money is academic, because then it's a question of just building positions the more capital you have available. It is as simple as that. It's not to show you how much money you can make, it's to show you how many pips you can make with consistency over an extended period of time. It's not about how many you make on the day, it's how many you make on the week or the month. That's really what counts in this business. It is as simple as that. Sorry, I've got the chat box closed at the moment. Okay, I've got the audio back, good. Okay, there we go. Right, let's just wrap up very quickly, show you where all the bits and pieces are. There we go. This is where you'll find all the indicators at quantumtrading.com, MT45, NinjaTrader 78, TradingView, as I say, we're hoping to get that all launched this week. So if you have the full package, you will get them added automatically. We are going to go around through all the accounts, and where you have the full package, update you with all those indicators that have up to date or up to now been missing, and they will be added into your accounts. But don't hold me to that. We have had a few technical things with the indicators in final testing, so please bear with us, but they are coming, I can assure you. TradeStation's 2 accounts is either TradeStation Global, which as I showed you earlier is running off the Interactive Brokers account, or you can run it with TradeStation Securities on version 10 and above. This is the Forex program with the funded option available. It is optional, it's only available to our students. You can find out all the details here. You start off at 5, 10 or 15,000 as an evaluation account. There are risk and money management rules, as you would expect. It's our money, so we do have to protect it. But they are very sensible. The targets set are very achievable, and you basically move up the levels through from, as I say, 5, 10 and 15,000. On those levels, you can only trade the 28 currency pairs, but as you move up into the next levels, you can trade, as you can see here, we've added indices, and you've also got gold available. So once you're up onto portfolio manager level, and that's where your capital is multiplied by 4. So if you're on 15, then you get 60,000 to trade, and you move from there to 120,000, 240, 480, and so on up to the 2 million. And you earn as you go, because we kick back 35% of profit on the evaluation stage in a lump at the end of your successful period with us. And then on the next levels, you start to earn monthly, and you earn that at a rate of 50%. So you get 50% of your profit back to you paid monthly. And at the top levels, it is 60%, and it becomes extremely significant at those levels, I can assure you. So that's the funding. And that is part of the program, and the program is just comprehensive. It covers everything you need to know about the Forex market, from relational to fundamental to technical, deep dive into VPA and everything else. There's around, I think, 450 odd lessons. There's 250 to 300 hours of video in there. It's huge, and it just teaches you everything you need to know. And in addition to that, you've also got the VPA Traders Room, where Anna and I are there all the time to answer any questions, and indeed other students do also. Finally, that's Anna's site, annacooling.com. That's where we do all the analysis. Did one on Hog yesterday, one of our favorites. Iron Mountain, another nice stock. So there's lots of analysis there to follow. So that's it. We're going to run, grab a coffee. We are back at 2 o'clock, I think it is, for the next one on futures, and then 3 o'clock on stocks. So if you're not coming along to those, enjoy the rest of the trading day and trading session. And we will see you in the next few hours. If not, as I say, enjoy the rest of the day. Thank you so much for coming along today. Hope you've enjoyed it. See you soon, and bye for now.